Hey, everyone. I think we're live. Whoop,
I
whoop.
think so too.
I think we might have caught you fixing your hair there, Corey.
All three of them. All good.
So, everybody, I hope you are ready for an informational night tonight. We got Ryan Bates from Equiton. He is about to drop some golden nuggets for those of you who want to invest passively or even put some registered funds to work and get a better return, a consistent return, and have an alternative. Because people think that you can't use your registered funds and invest it in real estate. And Ryan is going to show us a way that we can do that tonight. So, super excited about that. Let's see. We got a whole bunch of people on. Who do we got here? We got Martin L, Susanna, Linda Robinson. Why don't you guys put in Marcella? Why don't you guys put in the chat where everybody's coming from? I'm very curious to know where everybody is logging in. I myself, I'm in the GTA, the Greater Toronto Area, just outside of Toronto on the west side in Milton. Corey, where are you streaming from tonight?
Sarnia, Ontario.
Sarnia. Woo, woo. It's nice in Sarnia. You're right on the water. And Ryan, where are you located right now?
I'm downtown Toronto.
Downtown Toronto. Man, it's busy there. It is busy.
Yeah. Always.
So, Linda's in Milton. I got another Miltonian. Yes, awesome. We got Susanna's in Grimsby, Mark's in Toronto with you there, Ryan. We've got Brampton, Edmonton. We got Karina, one of our students. We got Mr. Cohen's in Toronto too. Allie's in Niagara. Welcome, Allie. Who else we got? South River. Yeah, we got all kinds. Waterloo. We've got go Leafs, go. Yeah, go Leafs, go. Tom or Mark says. Awesome. All right, guys, we're going to kick off the webinar. We got a few slides here to work through. And again, we just want to congratulate everybody for taking the time to invest into yourself. We really are a proponent here at Strategic to invest in ourselves and lead with education and knowledge, because that's going to help you make smart decisions and really smart investment decisions. And you can't do that without the knowledge. It starts with having that education. So congrats to you guys for doing the right thing, going out there and getting that knowledge base so that you can make smart decisions moving forward, because we all know that education will separate the sophisticated investor from the average investor. And for myself, that's why I was a amateur landlord or amateur investor into a sophisticated investor. Made all the difference in my life. All right, Corey, do you want to go through this slide? Because we also know that you need to be engaged to learn, right?
Very true. So this is something that we go through in every presentation here, whether it's the public or one of our clients here, but we appreciate everybody showing up on time. Obviously be engaged as possible. This isn't like a regular Zoom call where everybody's on camera, but pretend like you're on camera and be present. And after today, make sure that you're actually putting in the work. Learning everything tonight is nothing unless you take some action, for sure. Be present, be grounded. Don't be afraid to be social. Document the journey. If you want to take a screenshot of you guys here with us live here tonight, tag us in it, whether it's Danielle, myself, or Ryan, by all means, feel free to. That's how you get the best return on your investment. It's by being fully present and actually implementing after the event.
Awesome. So we have obviously we need to have this, and I'm sure, Ryan, you've got a disclaimer slide too, but we just want to say that you want to make sure that you seek legal and professional advice for any investment decisions you make, guys, okay? Here we're sharing our experience, our knowledge, and we do go in depth, and this is really geared to help guide you and to help you have the conversations with the people you need to have conversations with. But every person's situation is unique. And so we definitely want to encourage everybody. This is not investment advice. This is just a little bit of knowledge to help guide you, okay? So make sure you get professional advice. Also, this is being recorded and streamed. So if you're a little bit concerned about that, we will be posting, as you've already seen, some different comments on the banners here on the screen. So if you're concerned about that, then maybe not comment. But otherwise, this is actually going live, okay? All right. What are we going to cover tonight, Corey?
We're going to cover a lot, mainly how passive real estate can actually beat other investments. When you think about your return on time, right? That's that ROT, return on time. As real estate investors, we always want to be getting a return. And, whether you're active or more passive, I think it's important to have a bit of a balance of both. And you can't have all your funds invested at all times. So sometimes it does make sense to actually take a little bit out of your active investments and put it into passive. We'll be talking about why now is a great time to invest in bricks and mortar. I'm not afraid about what's going on in the market right now because I'm very confident in real estate investing. What the wealthy are doing to hedge against risk and inflation right now, which is why Ryan's on the call. The power of investing when you have those economies of scale. Equiton typically purchases, not typically, they do purchase in, multi-million-dollar purchases here and tens of millions typically. So, and with all that said, it's going to help you have the confidence to take action if you're stuck. So that's just a little bit about what we're going to be covering tonight.
All right. So for those of you who don't know us, myself and Corey, we've both been investing for over 20 years here in the local markets in Ontario. And we've started out as investors and then kind of migrated into coaching by default. We're kind of like the accidental coaches by people asking us. And Corey was doing his own coaching. I was doing my own coaching. And we really kind of did a meeting of the minds and blended our knowledge together in order to create a much, much more robust program for people out there who are looking for some real estate help. And we love actually pouring into our students and sharing our knowledge and seeing them gain success. It's really, really rewarding. But do you want to talk a little bit about your journey here, Corey?
Yeah, I don't want to take too much time away from the webinar, but much like yourself, Danielle, got into real estate investing in the early 2000s. And, there really wasn't a lot of access to information back then. I literally learned how to renovate properties, believe it or not, by watching all the Mike Holmes video series for the first 5 seasons or something like that on DVD before things were actually all digital, like on Netflix these days. So learn the hard way sometimes, but now we just want to make sure we're bringing you the best information when it comes to real estate investing, because again, there's a lot of information out there and we're almost drowning in information, but we like to curate it for our audience here so that you guys can just get the best of the best and then take the information and go do something with it. So done lots of different strategies here, and my great joy is to actually make see other people being successful in real estate these days.
I love that. Yeah, and I want to share because you said we curate content, and tonight is just an example of that. But I had heard early on in my journey, one of my mentors told me that 2 hours in a conference room or learning like this equates to reading a book and getting all the best parts of that book. And so it's almost like speed reading and just digesting everything that you need. And so I absolutely love learning this way. All right, Ryan's been really, really, really patient here, waiting for us to get through all this housekeeping. So we're going to introduce Ryan, your expert speaker for tonight. So Ryan's a senior associate here at Equiton, and Equiton is a private equity firm. And so what they do is, I'm gonna let Ryan explain it better. But essentially, what they do is they do pooling of funds, and then they go out and buy really amazing assets. They have a solid vetting team. I know a little bit about Equiton. I've been working with them now for some time, and I've known them for quite a while. I think I first was introduced to Equiton way back in 2017, and this was when they were just starting out. And at the time, Ryan, I know you weren't there then, but at the time, you guys only had one portfolio, and so now I think you have many now, which is amazing. But yeah, so Ryan is a capital markets professional with several years of experience in all sectors of private equity and investment banking. He has a background in the private equity and investment banking, and he provides his clients with unique market-driven insights so that they can make investment decisions and preserve and grow their wealth. And so I believe you work mostly on the client facing, right, Ryan? And all you do is just help guide them in the decision making, which I absolutely love that, because again, you need a strong professional team, guys, in your investment journey in order to help guide you, because we can't be professionals in everything, right? And so with that, I want to kick it over to Ryan. Here we go. Maybe Ryan. Yeah, here we go. I'm going to just put you, I'm going to see if I can put you, here we go. I am still learning how to manage these these things. How do I get Ryan in the picture instead of me? Guys, bear with me as I still try to practice this. Oh my God, this is not my presentation. Blake, help me out.
Can I just remove you from stage?
Yeah, I don't know why it's doing me. There's a way to there. Yeah, there's him, but how do we make him like this? Sorry, guys, bear with us. Actually, we could do that too if we wanted, but that might get in the way. There we go. Nope. It's too small.
Perfect.
Is that good? That's too small. I want to make it so that you guys, here we go. All right. Sorry, guys, we're going to do it this way. Much better. Okay, go ahead, Ryan.
Perfect. Yeah, thank you so much, Danielle, for the warm introduction, and you as well, Corey. I really appreciate coming on the webinar tonight, and thank you everyone for joining to learn a little bit more about what we do at Equiton and how we might fit into your individual investment strategies going forward. Really what I want to talk about here today, it's as Danielle mentioned, it's all about education, right? We want to get you educated on what's going on in the market, what it is that we do specifically, and how that might fit into your investment strategy, depending on what you're looking for, and how this is going to be a good option no matter what it is that you're looking for as well. So I'm excited to be presenting to you guys today, and whoever's controlling the slides there, if you could just flip on to the next page.
All right, can you see it there, Ryan?
Yeah. And as Danielle mentioned, we have our own disclaimers as well. But just to build on Danielle's introduction to me, obviously I've got kind of similar bullet points up there, but to give you the background on myself and how I got to where I am today, I've always really been passionate about investing and taking myself back to when I was 12 years old. I thought that Canada was the greatest country in the world, and Research in Motion, the maker of Blackberries, was the biggest company in Canada at the time. They'd come out of nowhere and stormed the world with this new and innovative product that everybody had quickly adopted in the business world. And I thought that was something that I wanted to invest into and get behind. So that was the first stock purchase that I made back when I was 12 years old. And as many of you may know, if you're familiar with that company, is it didn't work out as it was supposed to. Made some ups, but also made some downs. But really what it did is it gave me my first lesson about investing and how investments work and what really drives their value. But as I went on through the next several years, I sort of figured out that investing is a career that I can actually get into. So that led me to getting my degree in finance. I went to school down in the United States. And after I graduated, I spent the first part of my career, as Danielle mentioned, working in private equity and investment banking. And I was primarily working with institutional and corporate clients in that capacity. But what I learned throughout that whole experience was, again, what makes a really good investment, but also how to serve my clients in the best capacity by providing them with the best investments. And what we've seen, especially over the past 5 years in the public markets, is there's a hell of a lot of volatility. Pardon my language there. But you can make a lot of money very quickly on some of these public market investments, but you can also lose a lot of money very quickly. We've seen this in the past couple of months. Donald Trump makes one announcement on tariffs and it tanks the whole market by 3, 4, 5, 6% in a single day. And that's people's retirement accounts. That's their savings. That's all of the money that they've been saving for their entire life and investing. And that can really put a fork into their whole life plan, right? So I've been seeing that, especially over the past 5 years, and that's what led me to pivot my career from the public markets and into the private markets with Equiton. And fast forward to today, I've been happy to have supported over 200 families in corporations with these investments that Equiton is able to offer in the private markets to really give my clients the best of what they can get out of their wealth and to preserve it and grow it over time. And I'm hoping that I can share some of that knowledge with you here today to see if we can help you out as well. And next slide there. So before we get into any of the specifics, just to give you a baton, we are a private real estate investment company. And really the reason why the company was started was to provide everyday Canadians access to these types of real estate investments on a larger scale. And using our team's experience throughout all different sectors of the real estate space, to provide those consistent and strong month-over-month returns to our clients. But it's all going to be completely passive, and it's also all in the private markets as well. And next slide, please.
Feels like there's a bit of a delay before you see it because we're flipping. I'm not sure what's happening.
Yeah. But yeah, anyways, continuing on. So we were founded by our CEO, Jason Roque, as well as our CFO, Helen Hurlbut. And they really teamed together because they had this idea and this goal and this vision of taking their experience from working at real estate investors and asset managers and developers through decades of their own experience, but providing that to all different kinds of Canadians to be able to benefit from it, because they saw it as one of the most stable and consistent and proven ways to both build and preserve wealth. So that's really the thesis of the company here. And just moving on past those couple of slides there. And Equiton, really what you're looking at here is when you're making an investment, whether it's buying your own property or you're investing into a business or you're buying a stock or you're investing into a company like Equiton, it's really important to know before you look into anything specifically who the people are that you're investing with. And with Equiton, we're really happy and really confident, really comfortable that our team comes from decades and decades of experience. We have over 400 years of combined experience managing real estate assets, totaling over tens of billions of dollars, tens of thousands of apartment units, and they've developed tens of millions of square feet of real estate as well. So you have that confidence that when you go to bed at night, the money that you invest with us, it's being managed into projects, into portfolios, by people that have done this tons and tons of times before. And that's one of the most important things when making an investment anywhere is the people that you're investing with. And that's why I'm so happy and confident when I deal with my clients with all of our investments, is because we have such a great team backing all these investments. And really to speak to that, how our team's been able to succeed with this over time. Danielle mentioned she first became aware of us back in 2017. We were much, much smaller than we are now. That was kind of when we were in the first couple of years of our business. But over time, the assets that we manage, our clients' investments that we manage have grown from just around $60 million to today over $1.5 billion. And that's coming from the support of over 16,000 clients all across Canada who've entrusted us with their funds. And it's not just the funds that they've invested with us, but we've been able to grow and appreciate those investments over time. And that's because we have the team that knows exactly what they're doing month in and month out and year in and year out. And we're not going to be stopping that anytime soon. When you're thinking about into real estate, there's a very simple way to sort of break down the two avenues you can get into it. There's the passive route, and then there's the active route. The active route would be much like I'm sure many of you do, is going out and purchasing your own rental property, or you purchase a commercial property, you purchase an industrial property, and then you have to go and source the mortgage. You have to find the tenants. You have to deal with the repairs and maintenance and insurance and all those different kinds of things. And it can be a very lucrative investment. And but it also takes a lot of time and effort and energy. And when you're investing large sums of money, or you're looking to start out, whichever it is, some people have their own full-time job and they don't have all the time to dedicate to one or two or even several different properties. So one of the ways that you can still get the same exposure to the same kind of returns as active real estate investing is by passive real estate investing. And that's sort of what we do here. And when you're doing the active side of real estate investing, as I mentioned, it can be very, very lucrative. But as we've seen over the past several years, increasingly you can have challenges with tenants. You can have challenges with the increase in labor for the repairs and maintenance. And as interest rates have gone up over time, the economics of owning a rental property for an individual might not be as lucrative as they might be for a larger and more diversified corporation. So there's certain challenges that come with the active real estate investing. And that's kind of where passive real estate can come in, is by taking away some of those headaches, but still giving you really the same sort of lucrative returns. But it's just investing on autopilot, so to speak. And if we just go past the so there's within passive real estate investing, there's also several different ways that you can get exposure to this. You can invest into a public real estate investment trust. There's loads of them out there, with varying degrees of success. And the benefit of that kind of investment is you have instant access to purchasing the investment. You can open your laptop, go on your TD or your RBC web broker, and purchase some shares instantly. But the main drawback of that is something that we've seen over the past 2, 3, 4, 5 years is there's everyone else is able to do the same thing, which means everyone can purchase at the same time, or they can also sell at the same time. So you're very liable to a lot of market volatility in the public markets. Whereas in the private real estate markets, the private markets in general, instead of purchasing the shares in any of our offerings through a stock exchange, you're purchasing it directly from Equiton. And by doing that, your investment is a lot more inherently tied to the value of the underlying real estate assets. And you then are essentially reducing your risk of that market volatility, because the value of your principal investment is inherently tied to the value of our underlying assets there. And another thing to think about here is traditionally, a lot of you would have had investment advisors, and what they've told you is the best balanced and diversified portfolio would be 60% equities in the stock market, and then 40% fixed income in the bond market. And things have rapidly been changing over the past 20 years or so. One of the biggest entry players into this space is alternative investments, which includes private market investments. And that advent has been coming on from the most sophisticated investors all across the world, and especially here in Canada as well. Because it's a better way to diversify the rest of your portfolio and provide an anchor of stability in that portfolio, versus the more higher growth prospects that you might get in public equities, but they also have the volatility. So it's been an increasingly more common way for the most sophisticated of investors all across the world to be diversifying. If you just scroll forward. So the best way to approach investing in today's world is by having the best balance of diversification. And that's going to include your traditional 60-40 public equities and public fixed income portfolio. But it's also going to be including these alternative kinds of investments like private real estate, as well as cash. So you have the right balance of everything that you need out of your portfolio. And really, in Canada specifically, the players that have been pushing this initiative and adopting this initiative specifically have been the Maple 8 pension funds. And that would be your Ontario Teachers Pension Plan, Investissement Québec, the CDPQ, the Alberta Investment Management Corporation, and the Canadian Pension Plan, to name a few. And these are some of the most well-managed pension funds anywhere in the world. The Ontario Teachers Pension Plan was actually a pioneer in that they were one of the first pension plans anywhere in the world to actually take internal control of their investments instead of outsourcing it to another third party. And they did that around the early 1990s. And that kind of spurred a trend for all of Canada's pension fund managers to do the same. So they have decades of experience managing all of their constituents and their beneficiaries' investments very well. This Canada Pension Plan, for example, has been above their requirement rate for distributions for their pension for their pensioners for years and years now. But what they've been doing in order to keep fulfilling their obligations to their members over the past several years is increasingly allocating towards private market investing. And within private market investing, that's increasingly included private real estate as well. So one of the ways that we're able to track the performance of privately owned Canadian apartment buildings is through the Private Canadian Apartment Index. And that's something that we are very inherently involved with as well, because we have a private apartment portfolio. For over the past 40 years, the Private Canadian Apartment Index has never returned negatively in any individual year. And when you think about what's happened over the past 40 years, you've had Black Monday in the 1980s. You've had the Russian bailout crisis in the 90s. You've had the dot-com bubble at the turn of the century in the millennium. You've had the 2008 financial crisis. You've had COVID-19. You've had war breaking out in Europe, interest rates rising very rapidly. You've had the real estate market in Canada coming to almost a grinding halt for most people. And throughout all of those different economic cycles, crises, expansions, etc., the Private Canadian Apartment Index has performed positively. And that's really a testament to the assets that you're working with here. And that's exactly what you're going to be getting with Equiton as well. If you're just able to go a couple slides ahead there. Yeah, so this slide here sort of puts it in perspective of how the Private Canadian Apartment Index has performed. And this is just a aggregation of all of the privately owned apartment buildings all across Canada and how they've been valued by independent third-party accredited appraisers and how much cash flow they've been producing. So for the past 40 years plus, it's performed positively every single year. And where Equiton sort of comes into this is we're able to provide you with access to all different kinds of investments in this space. And we keep it pretty simple by offering 3 different investment solutions, Some are more focused on providing benefits to income-oriented clients. Some are more focused on long-term growth. There's a mix between the two throughout a couple of them as well. But at the end of the day, regardless of what it is that you're looking for or what it is that you're planning for, there's going to be an option or a mix of options that we have that's going to help you reach those goals, which is something I'm really excited about moving forward, is that no matter what it is that any client or prospective client that I speak with, no matter what it is that they're looking for out of their money, out of their investments, is that I can point them into any direction of what we have, or even a mix of what we have as well, because these are such proven and fantastic investment options.
So Ryan, I'm just going to go back a couple of slides because as you were talking, I guess like you're talking and we're not flipping the slide so people can't see it. So I just want to go back a couple of slides. So what you were sharing about demonstrating the consistency over the last 40 years, and this is where the audience can see really where the trends are, like through Black Monday, how the Canadian apartments have done, and then through the Asian financial crisis and the tech bubble, the global financial crisis. I mean, it's all here, right? COVID. And so, and look at the trend here, guys. It's pretty incredible how this asset class is actually one of the most stable asset real estate classes you can buy. And the fact that you can get in on something like this without having to actually buy the, you know, $200 million apartment building or $300 million apartment building is pretty freaking cool. So yeah, I just didn't want to miss these couple of slides here, Ryan. And here's another one just to see by asset class what it looks like, and how they've done over annual return since 1988 to 2023 here. So, and I just think it's really important. I mean, you've put some really good information together here for the audience to see. So, sorry, I didn't want to interrupt. And guys, sorry, I just want to say real quick. If you guys have any questions for Ryan, post it in the chat, okay? So if you have any questions about the stuff that he's sharing, feel free to post it in the chat. Obviously, I don't have a problem interrupting him, so I will make sure your question gets asked and Ryan can answer it. Sorry, go ahead, Ryan.
Yeah, no, I do appreciate you interrupting me there, Danielle, because it's really important looking at that chart, and it kind of underscores how the underlying assets in that index, as well as our portfolio, what they actually are. They're very, very recession resistant. They perform well in any sort of economic cycle. And over the past 40 years, no matter what's been going on in the wider market in Canada, anywhere around the world, they're servicing a very core need, which is housing. And a lot of times they're servicing that core need below the average market rental rate as well. So it's been very consistent over that time frame. And looking at this chart here, showcasing the maximum return and the largest drawdown for any of these. What you can look at is, while private Canadian apartments don't have the biggest one-year return over the past 40 years, they also have the highest or the lowest drawdown of any of these investment options, which is a positive return in its lowest year of 1.7%. Whereas if you look at bonds, they've gone down to almost 12% in their lowest performing year. Canadian equities have gone down over 30% their lowest performing year. US equities gone down nearly 25% their lowest performing year. And that just showcases how this type of investment, it's meant to give you stability and consistency over time. And that's really what we're trying to capture here. We've been able to provide that as well. And I'll get into some more of those details in a little bit. But that's just to kind of give you that idea. And I appreciate you kind of highlighting that, Danielle, because it's really what we're looking to provide here.
I love that. So tell us about Equiton's apartment fund, since we're talking about that. And then I got a couple of questions here for you too, Ryan, that I'll pop up on the screen for you.
Yeah, absolutely. So Equiton's apartment funds, the simplest way that you can think about it is it's essentially emulating ownership of a rental property. But instead of owning just one single unit or a fourplex or a sixplex or whatever it is that you might own, you're investing into Equiton, our portfolio of 42 apartment buildings. We have over 3,700 apartment units. We're across 18 different communities in Southern Ontario and Alberta. And we have a portfolio that's valued at over 1.3 billion all across the portfolio. And really what you're getting with that is your own rental property can be a very lucrative investment. But if you don't have a tenant paying rent in that unit or in one of your 4 units in a fourplex, that's really going to have a hindrance on the economics of your investment and on the monthly cash flow as well. But when you have 3,700 units like us, any individual tenant not paying rent on any given month, it doesn't have really any impact whatsoever on the whole performance of the portfolio. So by doing that, you're increasing your diversification and lowering your risk of any sort of default from any individual tenant. And when we're looking to acquire these properties and the properties that we do own, we're purchasing apartment buildings in communities in cities and towns that have growing populations, growing economies, in nice areas close to all different kinds of amenities, transit infrastructure, etc. So they're going to be desirable places for people to live. And we're also going to be doing the work up front before we even purchase the property to make sure that it's going to be a good investment and that it makes sense for both us and our investors over time. And if you could just...
And what I like here, Ryan, too, is I don't want to go too granular in all of this because this is what you really do with your clients, but it's important to know too that they have different silos, so different portfolio, and this is everything that they manage, but they have different silos. So if you want to maybe go into commercial investing, maybe the returns are a little bit better there, but the risks might be a little bit higher. These are things you can talk about with Ryan, or maybe if the potentially if you want to be lower risk, you might want to go in just apartments only. There's different types of, I think you also have land development silo too, right, Ryan? So what you can do is just have a conversation with him to figure out what is best suited to your needs. There's a question here, Ryan. Is Equiton similar to a mortgage syndicate? What's the difference between a REIT and a mortgage syndicate? Yeah.
Yeah, so that's a really great question. I get asked that question all the time. The one similarity that we would have to a mortgage syndicate or a mortgage investment corporation is that we're dealing with real estate. Whereas with a mortgage syndicate or a mortgage investment corporation, you're providing debt financing to any sort of property owner, whether they be an individual or a real estate investing corporation. But with us, you're actually participating in the ownership of the properties. So you're dealing with only one party, which is Equiton. You're investing with us and you're a part owner in our whole portfolio. So when you compare it to a debt investment or a private lending investment, a mortgage syndicate investment, you're investing through another company who loans out the money to other individuals or companies as well. So you're taking one of the steps out of the equation, and you're also getting direct ownership in the properties.
Love it. So tell us about the returns.
Yeah, so with the apartment fund, this is going to be our most conservative kind of investment here, but there's still very healthy returns that we're looking at. We target annually between 8 and 12%. And just like if you had your own rental property, the returns are going to be comprised of two real components. That's going to be your rental income, and then it's also going to come from the property value appreciation over time. So with the income portion, we distribute about 5.7% per year to our investors, and that gets paid out monthly. So it's just under 0.5% per month. And then we also aim to grow the value of your principal investment in our portfolio another 2 to 6% to bring the total targeted range to 8 to 12%. And there's with this investment, all of our investments for that matter, it's a great way to invest your registered plans via TFSAs, RSPs, LIRAs, anything like that. It's a good way to tuck away those types of funds. But if you're looking to invest cash as well, it's a very tax efficient kind of investment because you're deferring all of your taxes until you actually pull your funds out, at which point you pay capital gains. So that income that you generate on a month-to-month basis, all of the tax is going to be deferred. So that's a really great feature of this kind of investment. And the other two investment options that we have, they sort of range in the risk return spectrum as well. The next one would be our income and development fund. And as Danielle mentioned, this sort of touches on our commercial real estate investment strategy. And what we're doing is we have a portfolio of commercial properties in Southern Ontario. And we also have a small component of lending and financing to other real estate developers. But these two types of real estate investments are going to be producing your income in this portfolio. And with our commercial properties, we own properties that we rent out to really big blue chip clients like CIBC. We have a Wendy's location. We have a beer store location. We have a Mary Brown's chicken location. We have a F45 gym location. So these are big companies that are established and have really steady income. So that's going to provide you with some steady income month in and month out. But where the returns can get a lot more lucrative is with our development projects. And in this portfolio, you're able to invest into all of Equiton's different development projects. And the way that those work is when each project completes, you get a special profit payout from each project. And that's going to be bringing your total targeted return to between 12 and 16%. And what's really exciting about this fund is we're actually completing a development right now out in Guelph here in Southern Ontario. We're finishing construction on some townhomes, some stacked townhomes out there. We've already started to move some folks in. We're expecting that one to be completed later this year, and that'll be a nice, healthy profit payout for all of our investors into this fund. So there's still an opportunity for a lot of folks to get in for that. But you also get the benefit of, until you get that profit payout and the next one and the next one, is you have that existing portfolio producing income month in and month out. That'll be about 6% per year, and then the rest is going to come from development projects. And that sort of leads me into our individual development projects here. We actually have just launched a mid-rise condo development here in Toronto, in North York, called Maxim at Wilson Station. As the name says, we're actually at Wilson Station on the Yonge University line 1 of the subway line here in Toronto. I live downtown Toronto as well. I took a subway out to this, not last weekend, but the weekend before, and it took me just about 15 minutes to get there. But what we're looking to do here and how these kinds of investments work, because they're a little bit different than our other two. You're investing with us at the beginning of the project, and you're investing as we bring each site of land through zoning and permitting and entitlement and site plan approval. And then we do the pre-sales on the condos. We are the general contractor to construct the condos, and then we complete and move everyone in. So you're going to be invested with us throughout that whole time. But once we're completed everything at the end, you're going to get a nice big healthy profit payout from this project and any of our other projects that you might invest into. And how that looks is we're targeting that to be towards the end of 2029, and that profit payout is expected to be 100.1% of your initial investment. So if you take that over the 4.5-year rough time frame that we're looking at, that's about 22% per year. And the minimum investment's just $25,000. You can also use all your RSPs, TFSAs, any kind of registered plans, or cash or a corporation. But the great thing about this is that you're investing for the long term. You're investing with us as we look to alleviate the housing crisis here in Canada, and specifically in Toronto, build more homes that people want to live in, that people need to move into. And it's a very, very accessible entry point for a type of investment that's not typically available to regular investors like you and myself. So this is more on the higher returns end of the spectrum. And it's a great way to park away your money for 4, 5, 6 years. And you come back at the end of the project and you get a nice, big, healthy payout. If we hit our target on this one, you're going to have double your money when the project's complete. And one of the things that we're looking at here, and we're not going to try and pretend that the market for condos here in Toronto has been very positive over the past couple of years. Right now, there's a record inventory unsold on the market for recently completed condo units. And what we've seen is that these recently completed condo units, they were zoned and permitted and initially planned years and years ago, when there was a quite sizable bubble in the Toronto condo market. And the size of these units is way too small for users. They're really only for the entry point for people first moving downtown. The first condo that I lived in Toronto was 523 square feet. I did not last very long there. and because it was just way too small, even for one person to live in by myself. And God forbid if you have a partner that you live with, or a roommate, or you want to start a family, these really aren't livable units for people to grow their lives into, both as homeowners, but also for investors as well. So that's why there's been sort of a glut in the inventory in the market. So what we're trying to do here is we're trying to provide supply to the market that people actually want to live in. And there was a study done by Statistics Canada back in December, and it showed that there's still about 16% of Canada's population that's looking to move into a new home. And obviously those numbers can change month over month, especially with the Trump tariff situation. But what it does show is that despite there being a record supply and inventory of condos on the market here in Toronto, there's still demand for people to move into a new condo unit or a new house or whatever it might be. They just don't see the supply that they can actually live in out there right now. So we're looking to provide that supply by providing larger floor plans, more livable floor plans, better amenities, better features, better finishes, everything like that, and having a lot more 2+ bedroom units with 2+ bathrooms, things like that, and upgraded kitchen appliances, upgraded closet spaces, things of that nature, so that we can actually be able to absorb the demand that is out there from that 16% of Canadians that are looking for a new home, and also make it a worthwhile investment for them, because as everyone knows, the biggest purchase you'll make in your life is your primary residence. And if people are starting out their own personal primary residence investment journey, a starter home, a starter condo that they want to live in, they want to make sure that while they're living in it, and if they choose to sell in a few years, it's going to be a worthwhile investment for them, so that they can move on to a larger unit or a larger house as well. And that's what we're really looking to provide here. And the neighborhood that we're looking at is obviously at Wilson Station on line 1 of the Toronto subway system. We're one subway stop away from the Yorkdale Mall. We're right at the intersection of Allen Road and the 401. We're only a couple of stops away from York University, and we're crucially only 2 stops away from Downsview Park and Downsview Airport. And right now, Downsview Airport is the site of the largest redevelopment in North America at over 300 acres. They're looking to build tens of thousands of housing units and commercial space, and providing over 20,000 full-time jobs there. So there's very exciting redevelopment going on in the close proximity to this. But a project like that, it's on a much, much larger scale than our mid-rise condo here. So that's going to take upwards of 20 years for it to come to full completion. And what they're doing in the meantime at the Downsview Airport is they're actually building a concert venue there. It's called Rogers Stadium. It has the capacity for 55,000 people. It's going to be completed in June. And funnily enough, I'm actually going to a concert there this summer. I'm seeing Oasis on their reunion tour. So it's going to be a great place for people to come by, and it's going to be a great feature for people looking to move into this condo building as well. But really, at the end of the day, when you're thinking about this location, it's very accessible to get all around the city by subway, but also you're right next to the 401, which is the busiest highway in North America, with nearly 500,000 people driving it every day. So if someone who is working in Brampton or Mississauga, or they're working in Whitby or Oshawa, or even if they're working closer by in Toronto, they're going to be able to get there very conveniently. Or if they work on the subway, they work as a professor at York University, they're only a couple stops north. Or if they work at Yorkdale Mall, they're just one stop south. So really, we're looking to be kind of a central location for all the kinds of people in North Toronto looking to commute into nearby areas. But it's going to be a very, very great project for us. We're really excited about that specific location. And the way that these projects work, as I mentioned, you're with us every step of the way, from cradle to grave on these projects. We actually got under contract for this site towards the end of last year. We've only just launched it last week for investment to our clients and prospective clients. But in that time frame, we've actually been doing a lot of the zoning and permitting work on the project. So we're well on our way to getting those approvals, which we're hoping to get within the next year and a half, 2 years or so. And then we can launch the pre-sales. And once we hit a certain threshold of pre-sales, we're going to be able to get a construction loan and get shovels in the ground. And with construction, those typically take anywhere between 2 and 3 years. And that sort of brings us to our mid to late 2029 completion date in occupancy and actually closing out this investment and getting you, our investors, their nice healthy return. But the great thing about this is that we're doing a smaller raise for it as well. So right now we only launched it last week, but we're already nearly 20% sold out on the investment for this project. But it's a shorter term project. We're targeting under 5 years. But we also have other projects as well. The one other one that's open for investment, it's called 1099 Broadview. And this is a similar thesis to what we're doing at Wilson Station. We're oriented, we're highway oriented, but this is more centrally located in Toronto. It's located at 1099 Broadview Avenue, which is just north of the intersection of Broadview Avenue and the Danforth. And this area of Toronto, I live very close by. I'm only 3 subway stops away from this site, actually. So I'm in the area all the time to go for dinners, to go out to shopping and things like that. So I really love this area. And it has a nice personal connection to me because I spend so much time there. But what's really great about it is that you have a subway stop just down the street. You're right next to the Don Valley Parkway, which is a sort of major arterial highway going in and out of downtown Toronto. So you have very easy access to get all around the city, no matter where it is that you want to go for entertainment, where it is you work. But it's also a great neighborhood to live in. It's a little bit on the quieter end of Toronto because it's just on the periphery of downtown. There's a lot of single family homes in the area, very family oriented. It's an upper middle income sort of neighborhood, but there's great shops, great restaurants, great schools, great hospitals. And when you think about someone who's buying a home, and picking a place to live, what they want is they want to be close to a good job. They want to have a good school for their kids. If they get sick, there's a good hospital nearby. And if they get bored, there's going to be something to do. And in my opinion, there's not really many better spots in all of Toronto to do this other than the neighborhood of the Danforth. BlogTO also agrees with this as well. For 2 years running, they've ranked the Danforth the #1 neighborhood in Toronto. But if you're in the Toronto area, by all means, go through this area. It's a fantastic place to be. There's a lot around here, but some specifics with the investments, similar to the Wilson Station project, we're targeting to complete in 2029. The targeted return is at 103.3%, so a little bit higher than Wilson Station. And we're also building a mid-rise condo. You can also use your RSPs, TFSAs, LIRAs, LRSPs, etc., or cash or corporation. All of them are fantastic options. So these are both great ways for you to get some exposure to real estate development, to be along in the journey of Equiton and building new real estate, providing the crucial housing units that the City of Toronto and Canada, for that matter, needs. But also the places that people want to live in, the areas that they want to live, established neighborhoods, great transit infrastructure, everything that anybody might need in a place to live. That's what we're looking to provide here, and you get to be along for that journey with us.
Oh dear, I was I said, oh dear, I was talking, but I was muted. So this is a similar outlook then for Maxium, right?
Yeah, so Maxium is actually our brand for all of our different condo development projects. And what we want to do is, instead of being a condominium, we want to be a condomaxium to provide the most value, the most space, the best floor plans, the best features, and everything like that. So we branded all of our different condo developments as Maxium, and we want to have a consistent brand all across them, so that when people see, oh, Maxium on Broadview Avenue, Maxium on the Queensway, Maxium on Vinci Crescent by Wilson Station, they know exactly what kind of building that is, what kind of features it'll be, what kind of units it'll be. so that people know what they're going to be getting with it, and they know it's going to be a differentiated sort of product.
So depending on what you guys choose to invest in or what the clients choose to invest in, your targeted net returns are 8 to 22%, right?
Yeah, exactly. So depending on what you're looking for, or what kind of investment accounts that you're using, what stage of life you're at, there's going to be something for you, whether it's the apartment funds, the development projects, or the income and development funds. What I always recommend to my clients is trying out diversifying across any different number of the options. I do see a couple of questions in the chat here about what the minimum investment is. For all of our different investments, it is $25,000. And there's incentives to invest more, etc. But across all of our different options, it's $25,000.
Love it. And you got all different types of registered plans you can use, of course, cash, right?
Yeah, cash. And if you had a corporation as well, what I see a lot with a lot of my clients, and all across the company for that matter, when people are investing into their own personal real estate, they'll hold it in a corporation. And if they have some extra cash on the side, they want to invest in something passive, put the money to work for them. They can focus on their own properties. That's a great option that people take on as well. But the vast majority of our clients are using their registered plans with us because they're saving for their retirement, or they want to build up their TFSA. And these are great options to get that consistent growth over time.
Awesome. So we do have a bunch of questions. So let's go through the questions. That's it, guys. Was that good information or what? I love the returns. And you know what? To get those returns without having to deal with tenants or toilets, or actually letting somebody else deal with the tenants or toilets, I mean, that's pretty amazing. Especially if you're a busy individual. You might be a busy high income net worth earner that does long hours, or maybe you're an entrepreneur and you run a business and that's eating up a lot of your hours, and you have some extra cash flow in your business, you want to invest that somewhere. This is a great way to invest it. I know some people, they just go to the bank and say, can you put my money in a high interest savings account or put that in a GIC? And here's a way to do it, guys, where you can really boost your wealth over time because of that compounding return. You get a higher return, you get it compounded, and it really does make a difference by the time you hit retirement. So I'm going to go through some of these questions here, Ryan. So the management fees, are they similar to what a mutual fund would charge their investors who pool their funds?
I'll give you an example. With our apartment fund, our management fees about 1.6% per year for Class A, and then about 0.6% for our Class C. So it's similar to a lot of different kinds of mutual funds. It's a little bit higher than some, a little bit lower than some, but I would generally say it's pretty similar to mutual funds. But all of our returns, I will say this: all of our returns are net of all fees. We're not going to try and hide anything from you like sometimes they might do at the bank. Any return that you see, the value of your investment, etc., anything in any of our materials is always going to be net of all fees.
Awesome, because you just answered another question here, which was also from Pablo. Okay, so another one is, you did mention the minimum. So Bucky was asking about the minimum amount. So it's $25K, doesn't matter what silo or what investment they go into, right?
Yeah. So all of our different investments are a minimum of $25,000.
Got it. And can the monthly distributions be discontinued by a private equity firm?
So with any different private equity firm, within all of the documents, you can see that they have full discretion to suspend distributions or to halt redemptions. What we can say with both of our different funds is that we've never had to do that, and we've never had to halt distributions either, or halt distributions or redemptions. We've been able to consistently grow the cash flow and the value of the portfolio over time. But with any private equity company or any private equity fund, they have full discretion of this, and we're not any different in that regard.
And with those distributions, Ryan, do you issue T3s or T5 double 08 tax documents each year?
Yes, we do. And we have our own portal that you're able to view all of your investment values and everything all across your different investments, and you're able to pull your statements, which show everything to do with it. And then on March 15th of each year, we come out with our tax documents as well. And depending on the account and the kind of investment, we'll have all of your tax documents available for you there.
Awesome. I'm going to try to get through as many of these as possible. Okay, guys. Now, do you need to be an eligible or an accredited investor?
Yeah, so you do need to be an eligible investor to invest with us. And the quick and easy way to think about that is personally, you need to have an income over $75,000 over the past 2 calendar years, or you need to have a household net worth over $400,000, which includes the equity in your home and the value of all of your savings and investments. And that's the minimum level that we're able to accept based on the Canada Revenue Agency guidelines.
Awesome. And Sabi's asking about the tax rate on passive income, because it is taxed at capital gains, right?
Yeah. So with the apartment fund, the income that you're generating each month from the rental income, all of the tax on that is deferred until you actually pull out your funds from the from the investment, at which point you'll be paying capital gains. And as of right now, with the recent tax changes having been repealed, 50% of your taxable gains are taxable at your marginal income tax bracket. So it depends on each individual, but you're deferring all of that tax until you actually pull out your funds. And one of the great things about that is, A, you can take tax-free income from your investment year in and year out until you want to pull out your funds. But B, you can be strategic in when you want to actually pay that tax. Say when you work in your own business or you retire, and you have a year where you're not going to be making a lot of personal income, so you won't have a big tax liability, then you can actually sell off your investment and take on those capital gains to your taxable income and be very strategic about it. So that's a great feature that we're able to provide with that.
Awesome. And if you have your 25K investment in a non-registered account, are the distributions eligible for the dividend tax credit?
No, because the distributions are treated as return of capital. And as I've been saying, with that, you're deferring all of the tax until you actually pull out your funds. And the way that you can think about it is, if you're taking it in cash, you're essentially getting your initial investment paid back to you. And you're deferring all that tax until you pull out your funds, at which point you'll pay capital gains.
Awesome. And how long does someone need to remain invested? I think it depends on the which one they invest in, right?
Yeah. So the first thing that I'll say with that is, with any real estate investment, especially in the private markets, the best results are always going to be achieved with a longer term focus. And that's why the majority of our clients are using their RSPs or using their TFSAs, because they're looking for a longer term investment with us. That being said, with our investments, we typically recommend holding for at least 3 years. With our 2 funds, the apartment fund and the income and development fund, that is a minimum of 3 years. But we do offer you access to your funds before those 3 years are up. So you have the peace of mind knowing that if you really need your funds, an emergency comes up, you are able to access them. But within those first 3 years, there is a early redemption fee. But when it comes to our development projects, when you make the investment, you're going to be locked in until the project actually completes, at which point you get your larger profit payout. So it's a little bit different between those 2 kinds.
Okay, I'm seeing a lot of questions here when it comes to the brokers to use. Now, can we just talk about that for a second, Ryan? Because I don't want people to be confused. So if you're using your registered funds, guys, you have to move your money, and correct me if I'm wrong here, Ryan, but you have to move your money over to a self-directed account, and that would be with Olympia or Questrade, and maybe you can name a few of them, but you're not going to be able to do it at the big banks. I got some people asking here if you can do that at the big banks. And can you just maybe clarify a little bit on that?
Yeah, and that's a really great question. So on my team specifically, we work with clients to use self-directed accounts at Olympia Trust Company and Odyssey Trust Company. But we also work with a number of different investment brokerages and broker dealers all across Canada. Some of those would include Canaccord Genuity, Industrial Alliance, Raymond James, Ventum Financial, et cetera, independent firms, but we don't work with the big banks. And that's primarily because they only want their clients to invest into their own investment products, so they don't take on other companies' investment products very often. So if we have a list of approved brokerages that we work with, but if you're with one of the big banks, you would come directly to our team, at which point you could transfer your funds into Olympia Trust or Odyssey Trust Company, and we would actually handle that whole process for you as well.
Yeah, and that's what they do here, guys. They can walk you through all of that. So I strongly encourage, if any of you guys want to actually have a conversation, because we're not going to get through all the questions. Like, you guys are flooding us right now with these questions. Pablo got us open. He opened up the floodgates, and then everybody came in behind. So we're just not going to. I was kind of going through in chronological order, and then I realized there's so much more here as we're going through. But you can scan this QR code, guys, or DM Ryan, DM myself or Corey, and we can help you get this link if you don't have the ability to scan this right now. And then we'll make sure you can get a call with Ryan. It's absolutely free. It's like no obligations. He'll answer your questions and see whether or not this is a good fit for you as a method of investment. Okay, we can go through maybe 2 or 3 more. Let's fireside chat this, Ryan, because we're going to go a couple minutes over, guys, because we were a couple minutes late getting started, and I apologize for that. That is strictly on me. And as it always is, it's always my fault. But here, let's see what other questions we got here. We got Bucky is asking if you provide drip with your funds.
Yes, great question. And the short and long answer is yes, we do provide it with both the apartment fund and the income and development fund. The long answer would be is that the incentive to do that is that when you do reinvest your distributions, you're actually reinvesting at a 2% discount to the market price of the fund. So you get an extra little bit of compound growth there over time, and it's actually the option that the majority of our clients select as well.
Awesome. And just to confirm here, Susanna wanted to know, you only pay the capital gains once you pull out of the funds, right?
Right. With the apartment fund, yes. With the income and development fund, it's a little bit different because you have the development projects in there. But with the apartment fund, yes, you only pay capital gains when you pull out the funds.
And you have to be Canadian?
So yes, you have to be a Canadian resident with a Canadian bank account and a Canadian address. There have been, some unique circumstances where we've taken international investors, but it's very, very unique and rare. And there's a lot more different hurdles to jump through. But if you are a U.S. tax-paying resident, there is absolutely no way you can invest with us unless you have an RSP in Canada. That's the one thing I'll say.
Awesome. Okay, let's wrap up with Corey wanted to clarify here that did you mention that there's a profit split with investors? Like, what is the split?
Yeah, so that's a great question, and thanks for reminding me to bring that up. When you're investing into a project with us, you got to know that we have some skin in the game as well. So that profit that comes out at the end of the project, that's going to be the only time that Equiton gets paid on these projects. So investors are getting 80% of the profits, which is going to be your 100.1 or 103.3% return. Then Equiton gets the other 20% on top of that. And what this does is it incentivizes Equiton to get these projects done as soon as possible and get them done as profitably as possible. So there's really that alignment going forward to make sure that you're getting your return as well. Because we're only getting paid when our investors are getting paid at the end of the day.
Yeah, when I did a recent podcast with one of your associates and I saw that breakdown, I was like, wow, that's very generous, and no surprise why you guys have so many clients that you've served over the years.
Yeah, and we're always looking to grow more, and we want to keep providing these types of investments to as many people as possible, because we've seen how they can actually really benefit people in any sort of stage of life, any sort of financial situation. It's always going to be a good thing to have in your investment portfolio.
Awesome. All right, so I'm just gonna call out here to Pablo, Leanna, Marilla. We got. I thought there was somebody else here. And any other questions that I might have missed, guys? Honestly, just book a call with Ryan. He's more than happy to go through and help educate you on the process, all of the fees and costs. Because I see there's more here. You guys are diving deeper, and we're truly out of time. We'd love to stick around and give you guys more. But unfortunately, right now, we're gonna have to wrap up so we can respect everybody's time. So, with that, we're going to share with you our next webinar that's coming up. Maybe Corey here, you want to jump in, and this is a hot topic for people, especially if you already have a property or you're looking to buy one that you want to lift and give some added value to it. Corey, let's talk about this.
For sure. I mean, it's one of those things where if getting into actual rental properties, if that's maybe a little bit out of your price range, but you already own property and you want to maximize the property. We've known Michael Emanuel for years, and his company is Infinite Design Services, and he really helps investors maximize their cash flow, unlock the highest and best use of the property. He is an absolute ninja at this, at the same time solving the housing crisis. So that's actually the thumbnail from a YouTube video I did with Michael about a year and a half ago. But definitely looking forward to seeing a bunch of people on our call on May 14th. So next month, I guess it's only about 3 weeks away. It's really interesting. I'm getting interested in building ADUs as well. The prices are coming down. People and companies are getting more efficient at building them. So I think it's definitely something that you should find out more about. There's grants and incentives going on in different markets, so don't miss out.
Yeah, guys. And we always want to share, you guys, a lot of you guys are like followers and come faithfully on all our webinars. Want to say thank you to you guys for that. And we do this for you. And we always want to share some resource so that you guys can see, kind of enhance your knowledge even more. And so tonight we wanted to share with you the pros and cons of REITs. And so you can get a deeper understanding of the REITs and maybe even help you have a better conversation with Ryan when you jump on with him. So make sure you scan this. We'll also send you a link to your emails if you registered for this event through Eventbrite. If you streamed, we won't have your contact information. So just make sure you get the QR code here. And we will also be posting this on YouTube. So in the show notes for YouTube, we'll also have the link there as well if you miss it right now. But truly, 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 guys, make sure you scan this and get this free resource that's going to help you have a better understanding of REITs and the pros and cons, because we really feel that when you're going to make an investment decision, you don't want to just know how it's going to work, but we also want you to know how it might not work, what the downside is, so you can make a really informed decision. So when you make an investment decision, you do it with your eyes wide open and you understand all the risks that come with it. So make sure you scan that. And with that, we just want to share with you our website. We have a lot of free content online. So if you want to go to the website, all you got to do is click on the button in the top right corner that says sign in or sign up. You create a profile, and then you can scan our free content tab, and anything you want to see, just click on it to register. It'll go into your portal, and then you can watch. A lot of content. We keep doing more and more stuff, more events, and we keep uploading it to our website. And so it's there for the grabbing. So make sure you go there and check it out. And I think we're almost done, Corey. We're not that late. See? And then connect with us. Woo, woo. Make sure you connect with us on social media. And Ryan, I don't know if you have a social media account, if that's something you guys do. What's the best way for people to reach out to you, Ryan?
Well, I've got my email and my phone number as well, but I'm also on LinkedIn. You can reach me there. And if you go onto Equiton's website, I'll have all my contact info there as well. So you'll be able to find me.
It's probably the easiest. Go to the website, equiton.com. I actually went to the website because I'm like, is it Equiton Asset Management? Is it Equiton Financial? No, it's actually just straight Equiton. So easy. I love it. Simple. And yep, love that. So you guys can go there and find Ryan's profile for all his contact info. We did have a slide. You can watch the replay too. There was a slide there with all his contact info there and booking a call. And then, of course, you can check out Corey and I. Follow us for great information. And if you really want to know about the May 14th webinar, the best way, we haven't opened up that page yet. We haven't made it public yet, but it will be in the next week or so. So just go to Eventbrite, click follow on Eventbrite, and that way you can see all of our future events upcoming. So we got some really cool stuff coming up in the in Q3. Actually, we got our golf tournament. We got yacht. Are we going on a boat again this summer? Yeah. So it's going to be lots of fun, guys. All right. With that, Corey, any final words? Ryan, can we say thank you to Ryan, everybody? Woo, woo. It's funny because we don't, when we do a webinar,
you as well,
just us.
Daniel and Corey. Really appreciate you having me on today, and thanks everybody who was able to join. I look forward to continuing on the conversation. There's so many questions we couldn't get through nearly enough of them, so I'm hoping that that turns into further conversations. And again, appreciate you guys for setting this up.
Absolutely. All right. Okay, everybody. Well, thanks for coming. Bye for now.
Bye, everyone.
Bye.